Hi, everyone, and welcome. I'm Kathy Luker, CPA and owner of Blue Harbor Consulting. Every week, I go live to help HVAC business owners take control of their finances, eliminate guesswork, and build profitable, scalable companies. If you're an HVAC business owner who's tired of overpaying the IRS or feels like you're missing out on deductions and tax saving opportunities, today's session is for you. Today's topic is tax strategies for HVAC contractors, and I'll be walking you through practical, legal ways to keep more of what you earn, reduce your tax liability, and make smarter year-round financial decisions. Let's get started. Most HVAC business owners overpay in taxes because no one ever showed them how to structure their business or finances strategically. They wait until tax season to think about taxes, and by then it's often too late. But when you approach taxes strategically, just like you do with marketing, hiring, or pricing, you can save thousands of dollars every single year. Taxes are one of your largest business expenses, so managing them intentionally can have a huge impact on your cash flow, profit, and long-term success. Your tax strategy starts with your business structure. Are you a sole proprietor, LLC, S Corp, or C Corp? Each one comes with different tax rules, compliance requirements, and planning opportunities. Most HVAC businesses start as LLCs, but many grow into S Corps, especially when the owner is making $60,000 or more in profit. Why? Because S Corps can save you money on self-employment taxes by allowing you to split income into salary and distributions. But this only works when it's done right. You need a reasonable salary, payroll setup, and compliance with IRS rules. If you're unsure whether you're in the right entity for your tax situation, that's something we can help you review. Tax planning isn't just about what happens at year end. It's what you do all year long. Good tax planning means knowing your estimated tax liability before the year is over, making strategic purchases before the end of the year, accelerating or deferring income when it benefits you, tax deductions in real time, not scrambling when your tax return is due. It also means proactively working with your CPA to understand where your profit is going and how to reduce your tax bill while staying 100% compliant. So let's talk deductions. Here are some write-offs HVAC contractors often miss. Tools and equipment. If you buy qualifying equipment, Section 179 and bonus depreciation can allow you to deduct the full cost up front. Truck expenses. Whether you take the mileage rate or actual expenses, don't overlook your work vehicles. Uniforms and branded gear, shirts, hats, jackets with your logo are all deductible. Training and certifications, any continuing education, license renewal, or technical training. Marketing and advertising, Google ads, yard sign, your website, even wrapped vehicles. Software and subscriptions, House Call Pro, ServiceTitan, QuickBooks, CRM tools. Home office. If part of your home is used regularly and exclusively for business, you can deduct a portion of your home expenses. Tracking these throughout the year, not just at tax time, is critical to making sure nothing slips through the cracks. Here's a big opportunity that's often overlooked: using a retirement plan to save for your future and reduce your tax bill. Depending on your structure and income, you might be eligible for a SEP IRA, which allows contributions up to 25% of compensation, up to $70,000 in 2025, or a solo 401k, which allows both employee and employer contributions, up to $70,000 for the employer and $23,500 for employees, with catch-up if you're over 50. These plans are powerful because they reduce your taxable income today, they help you build wealth for later, and they show banks and lenders that you're running a financially sound business. Do you want to reimburse yourself or your employees for business expenses without triggering payroll taxes? Use what's called an accountable plan. This lets you reimburse for mileage, tools, cell phone use, home office, and more. Keep the reimbursement tax-free to the employee and make it fully deductible to your business. But it needs to be properly documented and written down as a policy and followed consistently. We can help you create one that's audit-proof. There's a lesser-known strategy called the Augusta Rule. If you hold team meetings, planning sessions, or client events at your home, and your home is in your personal name, your business can rent your home for you up to 14 days per year. The income is tax-free to you and your business gets a deduction. But it must be documented properly and backed up with meeting agendas, market rate rental estimates, and minutes. Used correctly, the strategy can result in thousands of dollars of tax-free income. Let's take a moment to cover some common tax mistakes we see with HVAC companies. Commingling business and personal funds. This muddies the water and can cost you deductions. Missing estimated tax payments leads to unnecessary penalty and cash flow issues. Inaccurate books. If your bookkeeping isn't clean, your taxes won't be accurate and you could likely overpay. Waiting until the last minute. Tax strategy requires time. The longer you wait, the fewer options you'll have. Over-reporting owner draws. This can raise red flags with the IRS, especially in S-Corps. Getting proactive, accurate, and consistent with your financial tracking is one of the best ways to reduce risk and increase savings. So let me say this, tax strategy isn't about loopholes or pushing the line. It's about clarity, structure, and intention. When we work with HVAC business owners, we help them choose the right entity, set up reasonable compensation, track the right expenses in real time, set up retirement and reimbursement plans, estimate taxes and avoid surprises, and create a year-round plan, not a last-minute panic. That's what strategic tax planning looks like. So to recap, the right tax strategies can save HVAC contractors thousands of dollars per year, increase profit, and give you peace of mind knowing you're operating legally and efficiently. Now, just a quick disclaimer, we don't provide personalized tax advice unless we're in a formal client relationship. That's to make sure all advice is tailored, documented, and delivered with the level of diligence and care required by law. But if today's session got you thinking, if you're wondering whether you're missing deductions, overpaying in taxes, or not set up as efficiently as you could be, I invite you to reach out. We can book a discovery call to see if it makes sense to work together. And if it does, we'll help you put a tax strategy in place that's tailored to your business, your goals, and your numbers. If you have any questions, drop them in the comments or message me directly. Taxes don't have to be scary, overwhelming, but you do need a plan, and we'd love to help you put that plan in place. If you're ready to get proactive with your taxes and start keeping more of your hard-earned money, email me at Kathy@KathleenLukerCPA.com. Thanks again for joining me today. Next week's topic is retirement and succession planning for contractors. Same time, same place. See you then.